In this video, I want to do a quick update of what I'm doing with my portfolio because I want to buy more Fortinet. I think Wall Street is wrong. I think Wall Street is too pessimistic. I think Wall Street is too negative when it comes to Fortinet. So Fortinet has become my number one buy on my list. And I am thinking of increasing meaningfully the position today. So in this video, I want to make an update on the thesis for Fortinet. We'll talk about what Wall Street is expecting from this company, and we'll talk about what I am expecting from this company. And if you have a clear gap between what Wall Street thinks and what I think, maybe you will have some good opportunities. So this is what we're going to talk about in this video, about the future of this company, why I think Fortinet is a complete and clear buy right now, and I am buying more. So obviously I'm biased. Obviously, I think Fortinet will outperform the market in the future. In this video, I will explain everything. In case this is your first video from this channel, welcome. My name is Christophe Noor. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. And full disclaimer, this is not the first time I'm buying Fortinet. I bought Fortinet just after COVID in November 25, 2020. And I sold at a quick triple. And I've been following the company for a while. I've been following Fortinet for a while. And I want to start my pitch with this. Okay, so I bought Fortinet in 2020 because of a top-down approach. Meaning, you all know the cybersecurity industry. You all know it's extremely important. And you all know that in 2020, the world became digital. Who will benefit the most if the world goes digital? If everybody is in lockdown, everybody is stuck at home, people will work from home, the world has digitized in 1 year at the same pace it would have digitized in 5 years. So the world accelerated. You will have much more companies working digitally, people working digitally. The number of cyber attacks increased substantially, let me call it this way. And it was a clear buy. The valuation was reasonable. So cybersecurity was a clear sector that would benefit from COVID, from lockdown, from the digitization of the world. And if you look at all the cybersecurity companies in the world, you have a CrowdStrike, Zscaler, Okta, Palo Alto Networks, plenty of companies. Now you have Rubrik, you have plenty of good companies. Out of all the companies, there are only a few of them that are reasonably priced because only a few of them are profitable. Okay? If you look at all the big companies like Palo Alto Networks or CrowdStrike, let me show you. This is Palo Alto Networks here. This is the biggest cybersecurity company. They are not profitable. They just turned profitable very recently. And as you can see from this chart, you see red candles almost every year, which means losses every year. They just turned profitable, but you don't have a lot of track record, a long track record of being profitable, okay? They do massive acquisitions and I don't like. Same thing for CrowdStrike. CrowdStrike is in a similar company. We are talking about a cloud-based cybersecurity company. Excellent work, excellent retention rate, excellent subscription run rate, but not profitable. Okay? And out of all the cybersecurity companies, only a few of them are profitable. You can like Qualys, you can like Checkpoint, or you can like Fortinet. And my favorite out of the three is Fortinet. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. If you look at the track record for Fortinet, we are talking about a business that has grown 20% per year, okay? For the past 15 years, right? Look at all these charts. Revenue up and to the right, net income always profitable. And by the way, the management team is very proud of having always been profitable since IPO in 2009. I've seen only one company that was as proud as Fortinet It's Alimentation Couche-Tard. They said they were always gap profitable since IPO. Fortinet is doing the same thing. Always gap profitable since the IPO. I have two companies in mind like this. This is very rare when you have a company that is focusing on maintaining the efficiency, maintaining the profitability, increasing the margins. At the same time, Fortinet is a different company from the rest of the cybersecurity players because of a minimal SBC, minimal stock-based compensation. You can compare the stock-based compensation like stock options, the free shares that is given to the management team. You can compare this with all the other cybersecurity companies. Fortinet is the company with the minimal amount of SBC. Okay. Additionally, you have insider ownership of 15% for Fortinet. So now you get the picture, right? Focused on efficiency, focused on profitability, not a lot of stock options, free shares. You have a high insider ownership. And the free cash flow is trending up 15-20% per year. Next point, you have a company without any debt. No debt problem. So this is fine. In case we have a recession, this is fine. And next point, this is one of the few companies in the industry that is doing buybacks when the stock is cheap. Only and only when the stock is cheap. Okay? You don't have this for a lot of companies. So you are talking about a growing industry that improved meaningfully since COVID. One of the few companies that has always been profitable in the industry, growing 20% per year with high insider ownership, not stupid dilution with SBC. They do smart buybacks only when the stock is cheap. So the buy in 2020 was extremely simple. And now, since 2020, the number of cyber attacks increased meaningfully. And here is the next wave of innovation. AI. AI is here. And we already start to see the reports saying that AI is increasing the amount, the number of cyber attacks. So similarly, you had a big wave of more cyber attacks in COVID. Now here is a second wave, much more cyber attacks with AI. And AI is just getting started, which means, this is my opinion, maybe I'm wrong on this one. My opinion is the number of cyber attacks will skyrocket because of AI, because of all the automation. And you start to see some things. I mean, if you look at Anthropic, what has happened a few weeks ago to Anthropic, plenty of AI-led attacks with minimal human intervention. Where do you think this trend will go in the future? Do you think you will have more cyber attacks without any human intervention or fewer of these attacks? My guess is you will have much many more cyber attacks in the future, which means the cybersecurity industry is expected to grow. Okay, first of all, I wanted to talk about the tailwind. The tailwind of this super industry, profitable industry, the cybersecurity industry that is expected to grow. It depends on the websites, right? But some websites say the cybersecurity industry will grow at 10% per year for the next 5 years, 12% per year, 14% per year. I think it can grow by at least 12-13% per year, minimum. Because of all the changes we are seeing in the world right now. And actually, maybe all the Statista forecasts are wrong because they were wrong in the past. In COVID, you had an expected growth rate for the cybersecurity industry of 8%? Well, it was not 8%. In reality, it was more 12%. So if you look at the statistics right now for the projections, the forecasts for this industry, maybe they are too pessimistic, first of all. Okay, so Fortinet is here, positioned as a profitable beast in a clear industry with major tailwinds in the future. So this is good. Always good to invest in growing industries with a growing TAM, total addressable market. So you are in a very lucky pond to fish, okay, first of all. Now, I want to talk about what has been the growth rate of revenue for many years since IPO. In red, you see here the revenue growth rate for Fortinet. In red here, you see the percentages here represents the annual growth rate of revenue. What has been the average? What has been the median? Is it the same? Oh, wonderful. So the average, as you can see here, the average growth rate for revenue has been 25% per year for 15 years. The median growth rate for the revenue has been 25% per year for 15 years. And if you want, you can play around with some numbers. Here I was on Fiscal AI, now I'm on Stock Unlock. You can put a CAGR here since IPO, 23% per year. And if you move for the past, 10 years, so since 2015, 20% growth rate of revenue. If you look at the past 5 years, 21% growth rate in revenue. Where do you think the revenue will be in the future? Do you think it will grow by 10% per year or 20% per year? If you think the industry will accelerate. Stock Unlock is a very good tool if you want to look at the CAGR, the compound annual growth rate for companies. By the way, they just launched a mobile app. So I highly encourage you to try it out. It's very new. You will get a discount if you use my link in the description. You have a great app, Stock Unlock, you can have on your phone. It's not in the Apple Store, it's for Android for the moment. They are working on the app for iPhones. Don't worry, it will come. But you can just check and download the app and see for yourself. So you have a limited time Black Friday sale also at the same time. So plenty of good things for Stock Unlock. Please use my link in the description and you will love it. It's cheaper if you use my link, cheaper. Okay, so for the revenue growth rate, 20% per year, CAGR. What is Wall Street thinking? Be my guest. If you click on estimates here from Fiscal AI, you can see what Wall Street is expecting for Fortinet. If you click on percentage change, you can see that for 2026, Wall Street expects Fortinet to grow revenue at 11% per year. 11%, okay? And for 2027, they expect the revenue to grow at 11% per year. Do you think it's too low? I think it's too low. Maybe I'm right. Maybe I'm wrong. Maybe Wall Street is right after all. But if you look at all the data I showed you, if you look at the consistency of the growth rate in the past, if you look at the acceleration of the cybersecurity industry, where do you think the revenue will be in the future? What will be the growth rate of the revenue in the future? My strong guess is Wall Street is wrong. The revenue can grow 15% per year. I would not be surprised if the revenue accelerates from there. The revenue growth accelerates. As you can see here, after COVID, in 2021, you had some refresh cycles and the revenue was growing 28% per year, and then 30% per year, and then 20% per year. So back to back 20% per year growth. It can happen again. And if it happens again, instead of growing 10%, Fortinet will grow by 20% per year. Which means if for some reason they reaccelerate and they deliver some spectacular numbers in an earnings report, the stock will go up 10% in one day. Guess what? This is exactly what has happened a few quarters ago. Wall Street had expectations that were too low, and then they smashed earnings estimates, and the stock went up 15% in one day. It can happen again. And now we are seeing a stock that for 2 quarters in a row has been punished. So I can look at any financial metric, any price to free cash flow could do the work, or even the stock price here to show you. Let me show you the stock price. Okay, look at this. First disappointment here, the stock was a little bit expensive at this level, and the stock in July 2025 dropped from $100 to $75. I bought here 5% of my portfolio. And then it rebounded, and then second report, it dropped again to $78. Now it's 78, as you can see here. I bought second time, again 5% more of my portfolio. Now, as I'm thinking about the next few years, I am doing a lot of work in the cybersecurity industry right now. Like I'm spending the majority of my week reading stuff about cybersecurity. I think it will improve much more than you think. I think it will accelerate much more than Wall Street thinks. And I think Fortinet is a clear leader in its category, which means I will buy more Fortinet. I want to increase the position from 10% of my portfolio to 15% of my portfolio. Three tranches of 5%. And this is not the first time I do this. I'm perfectly comfortable having a large position in my portfolio. In 2020, when I first bought, it was like 20% of my portfolio because of a big conviction I had. And this is the reason why I'm making 20% per year. When I have simple investment thesis, when the thesis is very clear, very simple, you invest in high quality compounders when they are available at a reasonable price and you see a big wave that is coming, you just put your board, prepare to surf, and you will be lifted by the big wave. I think you are about to see a very big wave in the cybersecurity industry. I think everything will accelerate. And maybe I'm right, and in the next 3 years, everything accelerates for the cybersecurity because AI is too big to fail. Or maybe I'm wrong and we enter a huge recession in 2026. Let's say next year you have a huge recession because of a big bubble for some reason, something pops. What do you think will happen to the cybersecurity budget for most companies? Do you think you can really cut your cybersecurity budget? If you are, I don't know, Coca-Cola, or if you are a bank, and we are affected by a big recession next year, do you think they will take the risk to reduce their cybersecurity budget? Absolutely no. Absolutely not. As AI is improving, you will get more attacks in the future. Every year you have more attacks. So this is an industry that is very recession resilient. Companies do not reduce their cybersecurity budget. Maybe they postpone the projects for future budget in the future, right? Instead of improving your cybersecurity defense this year, you do it next year. So maybe you can postpone the decision to increase your budget. But one thing that is sure is you never decrease your cybersecurity budget. And in the next 5 years, do you think you will have more attacks or less attacks than today? In the next 10 years, do you think you will have more cyber attacks or fewer cyber attacks? I think you will have much, much more. And the cybersecurity industry is a new industry. It's only 15 years old? Very new, very young. So it's very likely all the cybersecurity names will benefit massively and their stock prices will go up immensely in the future. But out of the bunch, Fortinet is hated. Fortinet is expected to grow at 10% per year. I think they will do much more than this. So now I showed you the stock price. I showed you that the stock price has done nothing for 1 year now. And if you look at the price to free cash flow, this is what you have. You have a fluctuating price to free cash flow that went from 20 to 50 to 20 again to 45. And now we're at 28. Okay, what is priced in? If you even look at the forward price to free cash flow, here is what you have. Forward price to free cash flow. Okay, a little bit less fluctuations if you look at the forward multiples. I bought in November, about 25 November 2020, price to free cash flow of 21. Forward price to free cash flow of 21. It went up immensely, went down immensely, went up immensely, went down immensely, went up immensely, went down immensely. And we are back to 25. Do you think it's reasonable or not? I think it's reasonable. Especially since Wall Street is pessimistic. Because they expect only, 10-15% growth rate in free cash flow. What are the estimates for free cash flow in the future? They expect the free cash flow to grow next year at 13% per year. And the year after this, 13% per year. If you listen to the management team of Fortinet, if you listen to the CEO, They say a good growth rate in the future is 1, not less than the whole market. So if the cybersecurity industry is growing 12% per year, they will not grow less than 12% per year. It has almost always been the case in 15 years. Second thing, if you look at the segments they have, for the product segment, they expect to grow 15% per year for products, and for services, more than this. So yes, I think Wall Street is too bearish. I think Wall Street is too pessimistic. They expect the earnings per share, look at this, earnings per share, to grow at 8% next year and to grow at 11% in 2027. Okay, let's check what has been the growth rate for the earnings per share since COVID. Let's check. I mean, what is great is you can backtest everything, right? No, where is it? Diluted EPS. Here we go. What has been the growth rate in? Well, you can check in the past, but you had a different accounting change. If you look at 2020, okay, let me do this. In 2020, the EPS increased 50% per year. 2021, you had a growth rate of 25% per year, 45% per year, 37% per year, 50% per year. Where do you think the earnings per share will be in the future? Much higher, right? What will be the growth rate of earnings per share in the future? Much higher, right? You always had an earnings per share growth above 10%. And for some reasons, Wall Street thinks that for the next 2 years, as we have the biggest wave of innovation with AI, Wall Street thinks the earnings per share will only grow at 8% and 11%. I think they are very wrong. Maybe, let's see if this video ages well. Maybe I'm completely right. Maybe I'm completely wrong. Only time will tell. But what I'm sure is I will do what I say and I will increase the position. Now, if you look at, it's already a big position in my portfolio. 10% is a core holding for me. And if I buy more, now it's my fourth biggest position in my portfolio. But if I buy more, it can be my second largest position, which tells you a lot about my conviction, by the way. You don't need to think too much about this one. Now, if you go to the DCF on Stock Unlock, by the way, great website, use my link, and you can test the app. If you think the free cash flow in the future, if you are being conservative, you can say the free cash flow will grow at 15% per year for the next 5 years. If you think they will continue to do buybacks at the same rate, so I don't touch the buyback line, they don't pay a dividend, and let's say the price to free cash flow stays the same at 25. If these are your conservative estimates, the stock is cheap by 15%. The fair value is $90 per share, so the stock is cheap right now. And if you buy right now, you can expect a CAGR of 13%. Okay? Now, let's see what I think will happen in the future. First of all, as the AI trend accelerates, the cybersecurity trend will accelerate. So instead of growing 15%, maybe this business can grow a little bit more than this. Let's say 18%. And if you have a business in a growing industry with a growing trend that grows 18% per year, it doesn't deserve a P/E ratio of 25. Maybe it deserves a little bit more than this. If it deserves a price to free cash flow of 25, you can expect a CAGR of 16% per year, which allows you to beat the market. If you think you can pay up for this one and have a price to free cash flow of 30, then you have a CAGR of 20% per year. If these are your assumptions, the stock is deeply undervalued by 50%. And if you buy right now, you can expect a CAGR of 20%. Some people are watching this video and they say, Christophe, don't you think that's a little bit too optimistic? And I will tell to these people to check the track record of the company, to check what they have to say about guidance. If you check the 15 years of guidance track record, the management was always conservative. So when they guide for 15% growth rate, you can expect 15% minimum, which means you can have 18% per year. And as I told you before, the free cash flow can grow immensely. Let's check what has been the free cash flow growth rate for a few years. Free cash flow growth rate. Wonderful for the past 15 years. This is what you have. What has been the average? What has been the median? The average. Oh, where is it? Oh, I don't have this line. Anyway, it will work with the median. The median growth rate for the free cash flow has been 26. If you remove the spectacular first year, oh, this is what you have. 24% per year free cash flow growth. Where do you think this trend will be in the future? Now you have a deceleration in free cash flow. If you don't know why, I've made plenty of videos about this topic. Where do you think it will be in the future? You have roughly 15 to 25% growth rate in free cash flow. Wall Street, I think, is wrong. So maybe they will grow 18% per year. But there is a scenario where they come back to their average growth rate, median growth rate, and they grow the free cash flow by 20% per year. If you think Fortinet will grow the free cash flow at 20% per year because of all the reacceleration we see right now, and if you think they deserve a price to free cash flow of 30, if these are your assumptions, the stock is 70% undervalued. And if you buy right now, you can expect a CAGR of 22% per year. And I don't even think this is too optimistic to have these kind of assumptions, because the business has done this in the past. It's not as if it was the first time they are growing 20% per year, right? I mean, they've been growing 20% per year for 15 years. It's not the first time we see this, okay? And what happened during COVID? During COVID, free cash flow has grown at 30% per year, 25% per year, 20% per year, 20% per year, and now 8% per year. And they told us, investors, that we are in a transition year. This is the year of transition. What if the trend accelerates? Maybe if you want to use the bullish scenario, the bull case, it will be you go back to the mean of 25% per year, but I'm not confident in putting this. If you think the free cash flow will grow at 25% per year, then the CAGR is 27% per year, which means you can compound your wealth at 27% per year. I will not forecast this. I don't think it will happen. I don't know, actually. So I think 20% is enough. If you think they grow by 15% per year, this is good, and this is decent. And maybe I will buy more if the stock goes down to $75 to $70. I want the stock price to go down, actually. I don't want the stock price to go up now because I'm in the accumulation phase. I want the stock to drop meaningfully so I can buy more. And I am quite confident if I buy right now, I can continue to make a large outperformance to this market. So yeah, I wanted to make a quick update on my position with Fortinet. I think that's one of the most simple buys you have in this expensive market. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.